Welcome to the battlefield of wealth, where money never sleeps. This is Greedonomics.
Imagine convincing the world's smartest investors that renting office space was actually revolutionary technology. Imagine raising more than $12 billion, becoming one of the most valuable startups on Earth, and then watching it all collapse almost overnight. That's exactly what happened with WeWork. At its peak, the company was worth an unbelievable $47 billion. Founder Adam Neumann wasn't just called a CEO, many employees described him as something closer to a cult leader. Private jets, tequila-fueled parties, billion-dollar promises, spiritual speeches, and one of the biggest corporate implosions in American history. So, how did Wall Street fall for it? And how did one man almost convince the world that leasing office buildings was the future of humanity? This is the unbelievable story of WeWork. Before WeWork became a billion-dollar company, Adam Neumann wasn't a billionaire. He was born in Israel, struggled with dyslexia, served in the Israeli Navy, and later moved to New York chasing the American dream. Like many entrepreneurs, he failed first. His first startup sold baby clothes with knee pads. It wasn't exactly changing the world. But failure taught him something important: people don't buy products. They buy stories. In 2008, Adam met architect Miguel McKelvey. Together they launched Green Desk, an environmentally friendly shared office business. The idea worked. They sold it, and used the money to build something much bigger. In 2010, WeWork was born. Here's the strange part. WeWork wasn't inventing new technology. It simply rented office buildings, redesigned them, and rented smaller spaces to freelancers and startups. That's it. It was basically commercial real estate. But Adam refused to call it that. Instead, he described WeWork as a technology company, a movement, a community, a platform that would elevate the world's consciousness. Those words sounded ridiculous. But investors loved them. Because technology companies receive technology valuations. Real estate companies don't. The story became more valuable than the business itself. Soon investors were pouring billions into WeWork. Especially one man. SoftBank founder Masayoshi Son. He believed Adam wasn't just building offices. He was building the future. Inside WeWork, employees didn't feel like they worked for a company. Many felt like they had joined a movement. There were massive company festivals. Unlimited alcohol. Celebrity performances. Motivational speeches. Employees were encouraged to believe they were changing humanity, not renting desks. Adam often spoke about love, energy, spirituality, changing civilization. Some executives later compared the culture to a cult. Questioning leadership wasn't encouraged. Everyone believed growth mattered more than profits. And while employees worked around the clock, Adam was living like a billionaire. Private jets. Luxury homes. Personal investments in buildings that WeWork later leased from him. Those conflicts of interest would later become one of the company's biggest scandals. Explain: massive funding rounds. SoftBank investments. Hypergrowth. Hundreds of global offices. Burning billions every year. Growth over profits. $47 billion valuation despite huge losses. Include line: Wall Street wasn't buying office buildings anymore, it was buying a dream. Cover: IPO filing. Public investors reading S1. Huge losses. Governance issues. Adam selling shares. Family control. Trademark issue: we. Lease obligations. Investor panic. Private investors loved the story. public investors wanted numbers. And the numbers were terrifying. Show, IPO cancelled. Valuation collapses. Adam resigns. SoftBank bailout. Golden parachute. Layoffs. Bankruptcy in 2023. In just a matter of months, the world's most exciting startup became one of its biggest corporate disasters. From $47 billion to bankruptcy. One of the fastest value destructions in modern business history.
WeWork, once the most valuable startup in the United States, filed for bankruptcy there on Monday. It had been a darling of Silicon Valley, worth tens of billions of dollars, but WeWork has hemorrhaged cash for years. In the second quarter of this year, 3/4 of its revenue went into paying for space. It has also struggled with corporate clients cancelling as remote work continued after the pandemic. WeWork's core business is taking long-term leases on buildings and renting the space out short-term. When it was flying highest, it courted big investors, most notably the Japanese tech giant SoftBank, and enjoyed backing from major Wall Street banks like JP Chase. But losses piled up as inflation soared, the downturn in the office sector deepened, and revelations of its founder Adam Neumann's erratic management style derailed WeWork's potential IPO attempt in 2019. SoftBank has dumped billions into WeWork to try to turn it around, but filing for bankruptcy shows it's admitting WeWork can't survive unless it renegotiates pricey leases in bankruptcy. Back in August, WeWork's website carried a warning to landlords that the company may cite the US bankruptcy code to rid itself of onerous leases. Some landlords have been bracing for a significant impact.
WeWork wasn't just a failed startup. It became a warning. A reminder that charisma can sometimes overpower common sense. That billion-dollar valuations don't always reflect billion-dollar businesses. And that when investors stop asking difficult questions, even the smartest people in the room can become believers. The story of WeWork isn't really about office space. It's about hype, vision, power, and what happens when everyone starts believing the myth. Because sometimes, the biggest scam isn't stealing money. It's convincing the world to ignore reality. If you enjoyed this documentary, subscribe for more stories about history's biggest corporate scams, financial frauds, and billion-dollar collapses. This structure covers the key arc of WeWork's rise, $47 billion valuation, failed IPO, Adam Neumann's leadership style, and the eventual collapse into bankruptcy.